Hi, and welcome to the Stock Scores Market Minutes for June 26, 2017. This week's topic, profit is in the patience. Then I will do my regular weekly market analysis and finally look at the trade of the week on CPRX. All right, the profit is in the patience. This is a saying from the book Reminiscences of a Stock Operator, which is really the only book that I recommend every trader read. It's a book written long ago, and it has some great bits of trading knowledge. The idea is that you want to stick with your winning trades as long as they are winning. Now, pullbacks against the trend are okay. If you have a stock that's trending higher, it's not going to go straight up. It's going to have pullbacks along the way. What is important is that you stick with the trade until the trend is actually broken. And that means allowing for those pullbacks, but when the trend is broken, that is the time to exit. Now, ideally what you want is to get into trades that eventually go parabolic, where they really run up and away from their trend line. That is the emotional buyers chasing the stock higher. And that is when you want to get aggressive with the exit. Now, if the trade doesn't work and it breaks down soon after you enter it, have no patience. Have no patience with your losers. You don't want to hold losers and let small losers turn into big losers. Be patient with your profits and have no patience with the losers. All right, let's get into this week's analysis. And here is a chart of the S&P 500. This is the 30-day, 60-minute chart, and you can see that we have totally directionless trading over the past month or so. And that has meant that it has been a difficult trading month. We don't have a trend. You know, here we had an upward trend, a nice upward sloping channel. That made the month of May not a great month, but it was decent. But in June, what have we got? We've got nothing but just this chop. There's no direction in there, and that is a tough thing to trade. And that really shows the market is a little bit uncertain. The buyers aren't willing to act. The sellers aren't really willing to act. You just get the market gyrating in this trendless sideways action. Will that continue for long? Well, what we need is to break out of this. We need a condensing of volatility. So if we get the volatility compressing, which is what we're starting to see there, and then we can break one way or the other, that is when we'll have something to enter us into a new trend. Now, looking at the longer term trend, we are still in an upward trend. I'm going to try to draw this straight up using a new drawing tool this week so I can draw these lines a little straighter. And you can see that we've got a narrower channel here that we've been in for some time. And we're, stuck in this little sideways range for 3 or 4 weeks. No action, but the trend is still up. And so as long as that trend remains up until we get a breakdown of the trend, first the minor trend there, and then the major one there, you should remain bullish on U.S. stocks. Now, moving along to the Russell 2000, which is the small cap sector, I have here the daily chart going back 8 months. And you can see that the reason there hasn't been a lot of good trading opportunities in this group is because we're stuck in a sideways range. And until we can break out of this range, I wouldn't get too optimistic. Now, I am starting to see improved action in the small caps. Not great action, but there is an improvement, a noticeable improvement in the last week or two, where money is starting to move into some of those smaller cap stocks. And you can see in the chart, we are actually building some rising bottoms right now. So that is a positive sign for the small cap shares. Moving along to the Canadian market, we've got a much different looking chart than in the US market. And the real problem here is that you have a downward trend. And you can see that we are trending lower. We broke through some support right there. We've come back to the trend line. I expect we will roll over and move lower. And so I would not be too optimistic about trading the Canadian market until you can start to build some rising bottoms and break this downward trend line. And it looks even worse when you look at the longer term chart of the Canadian market, because that long-term upward trend line was broken. If I sort of draw it like that, you can see we broke it really a couple of months ago, but it's taken some time to slowly build some negative momentum. You can see falling tops are starting to build. We had that breakdown last week. We're still holding this short-term support, so I don't think it's really ugly yet. But if we get a strong breakdown through that short-term support zone, I think we're going to head down into this area here. So I do recommend some caution with the Canadian market. The main problem is weakness in oil, which we'll talk about in a moment. On the venture market, we are also seeing weakness. You can see steadily falling tops as I go from left to right. We have support there, but not significant. It is holding. We saw a little bounce on Friday. Volume is generally moving lower. So the venture market doesn't look great. Now remember though that this is a market of many individual stories, and even though this market doesn't look great, you could still have an individual stock that has, a dramatic change in their fundamentals, which can do well. So you don't want to avoid the market, you just don't want to generally buy the entire market with optimism. Sorry, I've hit the wrong button there, so I'm just going to have to restart this. Done that before. All right, so moving along to the the Treasury bond market, we have rising bottoms. We have a breakthrough resistance back over in this zone, and we are generally moving higher. So it looks to me like the U.S. Treasuries want to go up, and that means interest rates going down. This despite all of the talk about the Fed raising rates. The bond market is telling us that interest rates are going lower, and the bond market wants to move higher. So keep that in mind if you are thinking about getting a mortgage or something like that. The general outlook for the U.S. bond market is for higher prices and lower interest rates. Moving along to the U.S. dollar, you can see we are in a downward trend, downward sloping channel. We are near the top of the channel, and we look like we're going to roll over here. You can see on Friday a little bit of weakness. That should point to the US dollar moving lower. Until it can break up and through that downward trend line that I've drawn, I would be pessimistic about the direction of the US dollar. On to gold. It's been a real chop fest over the last few months. You can see that we've got some rising bottoms building, which is a good sign. That's optimism, and we have resistance up in here. So we are building an ascending triangle. That is a good thing if you want to be bullish of gold, and we are diminishing in volatility with each wave. You notice here the volatility is much higher than over here, and the simple reason is that we are getting a compression of volatility between those two lines. So my expectation is we come up into here and we get stuck, and we'll come down and probably bounce off of the lower boundary. It's a sideways trendless market for now, but it could break out through here, and when it does, then we want to be bullish. Until it does, do not be bullish. Be generally avoiding the market because there's not anything exciting going on there. On the oil side, well, that is where we've got the ugliness. We've talked about the bearishness in oil for some time. We, of course, broke down through that support zone there. We've been building falling tops ever since. We are, in some senses, going parabolic to the downside. I do think that we are at some support levels where in the short term, we will get a bounce. We are overdue for a bounce in oil, but I still think longer term, oil is probably headed towards the lows of whatever it was a year or two ago. And so I would be generally pessimistic on oil. Do not think that this is anything more than a tradable bounce for a swing trader, maybe a day trader type situation where you can get a bounce for a few days. It is due for one, but I don't really see any signs that one is coming yet. And on to the fear index. Well, this is kind of a critical chart here because we are at real lows on fear, and that tells me that the market is almost complacent. Now, of course, we've had that choppy sideways action in June. That's one of the reasons we've got low volatility in the VIX. But I think that we could easily burst out of this if we get a breakdown in the market. So there's a little bit of complacency here. That means no one's really protecting themselves against a correction. Maybe there will be no correction, but if there does start to be one, you'll see this fear jump up very quickly. All right, so my outlook then, U.S. stocks bullish long-term still. We're still in that upward trend, but neutral short-term, and really that sideways choppy market makes it difficult to be a short-term trader. On the Canadian market, we are bearish long-term, having broken the upward trend line. Bearish short-term, we are in a downward trend on the short-term chart for Canadian stocks, largely because of oil. Gold, neutral in both time frames, tough to trade right now. It's very choppy. Oil, bearish long-term, bearish short-term, a little bit oversold and due for a bounce, but I would not get too optimistic longer term until the trend line can be broken. So as I said, June has been a month of chop for U.S. equities with no trend, making trading difficult. The Canadian market is suffering from low oil prices, and that could be the major factor that drags it lower. Oil is oversold, and it should maybe bounce back in the next few days, but that does not mean it is reversing its trend, so remain cautious. Gold is stable, but it needs to break out of that range to be tradable. It's stuck in a sideways range, which is hard to trade. And fear is very low. The question I ask is it too low, showing complacency? All right, on to this week's trade of the week. Now, I often show day trades, sometimes swing trades. This week, I want to show what I would call a position trade that really drives home the point of having patience with your winners. This was the day that I featured it in my daily newsletter, and for the simple reason that it was nice low volatility, and then it came alive with abnormal price, abnormal volume. And then for about 6 weeks there, it did nothing, but the upward trend was not broken. And now it's building an even more reliable trend, and it's starting to go a little bit parabolic to the upside. Now it's getting up near the top of its channel here, so I do think it'll pull back. But unless this upward trend line is broken, I would not be too worried about lower prices ahead. It's due for a pullback. It'll probably make one in the next week or so, but this drives home the point that sometimes you just got to be patient with your winners. This stock, as my entry point there at around 155, is now pushing $3. It's getting close to a double simply because of patience. The buyers are in control. They're sending the stock higher, and the volume is still coming in. All right, well, that has been the Stock Scores Market Minutes for June 26, 2017. Have a great week in the market and trade well.